Today we're diving into Warren Buffett's advice for navigating this tricky landscape called investing in 2025. Welcome back to the channel. If you're new here, my name is Devron. I'm a chartered accountant, business owner, and investor. And I recently came across a 1-hour video on Warren Buffett's take on the investing landscape for 2025. So instead of watching a 1-hour video, I'm going to break it down for you in a few minutes. A lot of what we're going to be speaking about is based on the US economy, but it does filter down into the rest of the world, and that's why it's so vital in terms of your investing strategy for 2025. Also, I'm an avid investor into the US stock market in terms of the ETFs, index funds, and certain stocks. So for me personally, I pay attention to information like this. The first thing is higher interest rates. Interest rates are higher than it's ever been in the last few decades. The Federal Reserve has raised interest rates significantly because they need to combat inflation. And while they have eased it slightly, they're still around about 4 to 5%. So why does this even matter? Higher interest rates make treasury bonds a much safer asset to invest into. Treasury bonds are a safer return for people that are a bit more risk averse. If you look at the current treasury bond yield, it's about 4.3%. Bigger money is moving from stocks into bonds, which is now making it much harder for businesses to actually go out there and get financing. And without financing, businesses cannot grow. Warren Buffett himself has personally decided to liquidate some of his stocks and move them into bonds. These are short-term treasury bonds. In fact, he's earning billions annually just by doing this one thing. This shows us that in unstable times and uncertain times, bonds can be a very useful asset class to invest into. The second thing he spoke about was that certain stocks are currently overvalued. Despite interest rates that are ridiculously high right now, the stock market hasn't cooled down and doesn't seem like it is cooling down in 2025. In fact, the S&P 500 rose 23% alone last year. Now, this was driven around a lot of hype by AI and the so-called Magnificent Seven companies out there. Your Apple, your Tesla, Nvidia, Meta, etc. But Warren Buffett warns us, and he says many of these companies are currently overvalued. He's been holding back on new investments into these companies, and he says that we should actually also hold back on them. He says, wait for better opportunities. He used a term, we only swing at pitches we like. For me, the key takeaway is if the valuation is too high, stay away from the investment. Don't force it. Don't try and time the market. You're either gonna wait patiently, reduce the investment amount that you're making either on a monthly basis or quarterly basis, or you can explore other opportunities out there in the market. Sort of look for undervalued stocks, bargains, etc. For example, Warren Buffett found some really good undervalued stocks in Japan, and that's where he capitalized by moving some funds there, taking advantage of the market and making significant returns. The third thing is the danger of speculation. Speculation is rampant in 2025, and I've seen that already in the first month of 2025, where stocks, Bitcoin, and other cryptocurrencies are currently soaring, and investors are always just chasing the quick returns, the get rich quick mentality. Again, Warren Buffett compares this to just gambling in a casino. It might work in the short term and you might make some significant gains by doing it initially, but over the long term, this is not sustainable and you won't be able to do this continuously. Instead, he says, focus on the fundamentals. You gotta treat the market as your server and not your instructor. He says, let the market offer you great deals like it did for him in 2008, where he scooped up a significant amount of Goldman Sachs shares and Bank of America at significantly low prices. So to wrap up that 1-hour conversation that he had into a few bullet points, what can we learn from Warren Buffett? The first thing would be to embrace patience. Great opportunities, they are rare, so we gotta wait for the right time and the right market conditions. The second thing is to consider bonds. They're a very solid option when the market is shaky and there's unstable conditions out there. Third is to avoid speculation. Stick to sound long-term investments that you have personally looked into and you are confident in. And the fourth is diversify and dollar cost average. Stock picking isn't your thing. Just figure out which index fund or which ETF that you want to put money into every single month, whether the market goes up, market goes down. You are dollar cost averaging into that asset class, and over time you will make a lot of money. And also, you're not focused on market conditions or what's going on in the economy. The mindset he says that we need to adopt in 2025 looks like this. He says, imagine you only have 20 opportunities in the market in your entire lifetime. You think carefully before making that investment. Now, for me personally, would I get scared when information like this is released to the world? And the answer is yes and no. Yes, it makes me a little bit fearful, but when others are fearful, you need to be greedy. And when others are greedy, you need to be fearful. There's a lot of greed in the market right now. So again, it increases the fear level. And when your fear level increases, you tend to reduce your risk and you tend to invest less into higher risk assets and you invest more into your stable assets. And also know, because I'm not a short-term investor, because I know how the market has performed year on year, decade on decade, because I've zoomed out on the chart. And I tell everyone to always zoom out on the chart that you are investing into. Thanks for watching, and don't forget to like, comment, and subscribe. And hey, share your thoughts in the comment section of which part of Warren Buffett's advice that you enjoyed the most. See you on the next one.